Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So yesterday we mostly have discussed the one thing, is the size of the rate change by the European Central Bank. So although the minor chances were existed for 0.5% change, and actually everything was telling that it will be 25 basis points, and as we said that if it will be 25 basis points, be prepared for retracements. It's just because traders will start booking the result. So you have the both central banks on behind, as we said in the past. So it is reasonable to consider what has happened and close the positions taking the profit. It's because volatility was relatively strong in recent few sessions, and that has happened. So yesterday actually performance here is purely reaction on Christine Lagarde statement and, well, moderate rate change in 25 basis points. It's all totally priced in. Once this has happened, traders start booking result. Today we have only single possible drivers, payrolls, although currently on the background and all the stuff that's going on right now in the banking sector in the background of the debt sale, I don't think this will be decisive point. In the debt sale, guys, it's a new turn. So yesterday, actually in this week, we have got a regular United States Treasury bonds auctions. I will show you in details this moment in a weekly report on the gold market. But in two words speaking, the yields on auctions with the maturity after the potential debt sale still stands high, and it stands not only high in the nearest month in June, but also for the July. This indirectly tells that the problem with the debt sale hardly will be resolved fast, and if technical default will happen, it will last for maybe a few weeks or even months. That could really bring lots of negative effect in all spheres of the economy in the United States. So this is very important, and this is what actually you can't read in the newspapers, in the mass media. So this is an important moment. So on this background, payrolls hardly will be something really decisive, but bring some volatility. Still, it could on the market. Speaking on the daily chart, I do not see really big changes here, although we could see this market hasn't quite reached the OP, but actually overall performance here stands inside of the overall tendency. We do not see something really, some deep drop and breaking of the tendency of high lows. It mostly stands the same. That's why, and currently on the daily chart, I'm not ready to tell that, well, market has lost the ability to complete the OP target. Besides, if you take a look at the Great British Pound, you could see that market is standing to our target, and XOP 2660 mostly is done. So our suggestion that this consolidation mostly bullish now is coming to results. So actually it's almost completed. On the Japanese yen, we also see drop in United States dollar value. So you can see what's going on actually on the fall time frame chart on Japanese yen, the weekly chart. Our butterfly, although was really almost failed, but market reversed in the right moment, and actually currently chances on the butterfly still exist. So that's why on the euro currency it's also maybe it's a bit early to speak that OP can't be complete. At the same time, on the fall time frame chart, there's two moments to keep an eye on. On fall time frame chart and the hourly chart. First of all, I don't know about you guys, but for me it starts looking like some kind of the rounding top is forming. So some kind of the cup or something of that sort. Because here is definitely you could see some rounding and slowing of the performance on the top. We do not see the same tendency with the same pace to the upside. Second moment, which is more practical for a current trading session, take a look at this nearest couple of candles on the fall time frame chart. At this point, we are not getting the grabber yet with this candle, but take a look that MACD stands near crossing, and it means that in the next 4 hours, market will start flirting with the MACD predictor, and if grabber will be formed, that will be important background that's just taken out of these lows, and this will be definitely the point in favor not to take any new long position. Besides, why I also do not want to buy right now is just because, take a look at the hourly chart. First of all, market has failed our perfect, or better to say, well, the situation, perfectly bullish situation, where we were considering this support area, and we said if market will able to stay here, we could think about taking the long position if downside action will be gradual. But you can see that market hasn't given us any chance yesterday, because on starts of the European Central Bank meeting, market just collapsed for the confluence, breaking it, returning back in the previous trading consolidation of our so-called head and shoulders that we were waiting, if you remember. Now market stands below this area. It stands in different trading area. Besides, collapse was relatively strong right to the XOP target on this ABC top, and agreement with the 10998 area, 618 support. Now we have just ABCD bounce in the shape of the Carter's triple to sell pattern right to the 618 level, and market is turning down. So in this performance, at least I would prefer to wait retesting of this area, 110 level, before making any decision and thinking about the taking long position or not taking, because momentum is rather strong. Here's, well, not really bullish performance at this area, so some impact of the momentum, some impulse trade here to the downside could happen, and it could be just retest some kind of the COP of this larger ABC top COP target around the same lows on the 109.87, 109.90 maybe, so in this level, in this area. And simultaneously I would keep an eye on this grabber. So if the grabber will be formed, it means that market will take it out of this low, so it means that it will drop even below this area. That will be another situation. But the first destination point is right there. When the market will come here, we will see what's going on, so whether this will be interesting for taking the new long position or not. But in the current moment, in this situation, well, especially when they come in payrolls, I do not want to take the position by far, because it's lots of maybe not very strong, but still bearish moments exist, and overall context, it's not attractive for me personally for taking a long position here.